Hello, everyone. Welcome back to the RationalInvestor.com's daily brief. Here we are back in the saddle. It is, where are we here? It's Tuesday, isn't it? Tuesday, October 30th. One more day until All Hallows Eve, I guess. Tomorrow's Halloween. And I suppose the stock market itself is doing some trick or treats for us here this morning. But I hope everybody enjoyed the marathon yesterday. We had kind of a fun session there. But it's awfully nice that we've got Mr. Bear in the house here this morning with us to try and keep Brian on track. How are you doing this morning, Mr. Bear?
I'm doing well. How are you? Aside from your technical mishaps, everything going okay?
Oh, I suppose so. Just roll with the punches. Julian's got this supercomputer going, and I think I finally actually got it to the point where I've hit its maximum. Well, it turns out that I can only have 472 tabs open. Damn. Anyway, welcome back to the show. Yeah, Bobo, it's actually, I think I even tweeted something to that effect out. BTC's birthday tomorrow. The interesting, BTC was born on Halloween. That's kind of an interesting coincidence. I didn't know that. But our third sort of prong to the stool, we've got the mayor of Vienna driving the bus. And if I'm not mistaken, I think he's freshly shaved. So, but I doubt he'll come on camera today. Anyway, how you doing this morning, Alex? Well, Alex might be here. Maybe he's not.
Yep, pretty good.
Oh, good. Excellent. Hi, Sen. Nice to see you. If I'm not mistaken, Sen, you're going to do a presentation for us coming up. Hey, there you go. Actually, I just saw you on camera on YouTube. So you are there on YouTube. Anyway, Brian's in kind of a weird mode here today. I apologize, everybody. A little bit wonky headspace. But nonetheless, here I am. The show's underway, and the good part about it is when we have Thomas here, half of my job is just to simply follow his lead. So, Thomas, where do you want to take us today?
Well, today is an interesting day in the stock market as we come off of yesterday's. It seemed like a flat day at first. We ended up down almost 550 points about 40 minutes before closing on the Dow. And then everyone started clapping into the closing, and the anchors started getting all excited. Oh, the stock market's rallying. We're coming back. And it still ended up closing down 250 points. So everyone's got their cheerleaders out to try and keep this market propped up. But as far as today's action, it looks like it's just trying to recover a bit from the massive volatility that entered the market into closing time. So I'm going to load up a couple charts and walk you guys through what I'm seeing from my desk and how things are looking. So as far as I'm concerned, I think yesterday was our capitulation event, or at least a short-term event that may lead to a short-term bottom, or at least a bounce at the very least here. You can see this massive tail from yesterday's action dropped us right into a 78.6 tag, and I'm using the lows from April, and those are really the lows that came into the market for this year. So it would make sense that we're in a reload zone and that the market would try to find a bottom in this area. So to me, that makes sense. Now, as far as the other markets are concerned, and again, I'm not going long here at all. I'm just saying that it would make sense that we're seeing for the first time an actual tail here, where it looks like there's evidence that market buyers entered into the marketplace and they decided, enough's enough. We're going to start taking positions. And these are probably value buyers and guys that see things as just simply too cheap after a sell-off. Now, whether or not they're going to be right or what their real plan is here, we don't know. I don't know if they're going long here for the majority of their portfolios, if they're trying to position themselves long for a longer period. But a bounce certainly makes sense. And everyone knows that we can draw our reload zones and look at where potential bounce levels would be. I know Mr. Tesla doesn't like me using animal references when they're vulgar or have death threats in them, so he wants me to use different references. So we'll call this the bouncy ball of a market that has come down and is now going to try to bounce back up. So no cat references for you. I did that for you, Christian. I hope you liked it. So 38.2 is right here at 25.2. That's about 600 points from where we are now. It almost makes sense because we're seeing the moving averages cross down. This 13 EMA here, I believe the red line is my 13 EMA. And maybe it's not. Maybe that's my 50, actually. Nope, that's not my 50. My 50 is in yellow. My 13 is in red. Yes, so this is my 13, and I've changed my yellow to a 15. I'm sure if I change this to a 30, it's a little bit lower. But essentially, when I see moving average crosses, that's when I see the market start to pause. And it wouldn't surprise me to see us test that moving average cross, and then we'll determine which direction the market wants to go in. So that's the Dow. As far as S&P is concerned, really the same thing. And I think it's quite fascinating that we're seeing these levels tested across all these time frames, also in the face of these potential bullish divergences. Just like you see here on the S&P, we had the same bullish divergence that's potentially coming in here on the Dow S&P. So a bounce is starting to make more and more sense. And we drew this trend line here off the S&P, and lo and behold, look at where these candles are closing. Now, I heard some interesting commentary from some technical traders. Actually, no, I heard some interesting commentary from the talking heads on CNBC. I think they had a guest on the show who was a fundamental investor. And he basically said that when the market loses its fundamental reasons and people can't figure out what's going on fundamentally, it's almost like they're blind, so they're forced to turn to the technicals. Well, we all do technicals here, and frankly, I'm in the camp that thinks that technicals are really what I go by over. I mean, of course, you can use a nice combination of both, but I do prefer using technicals to mark out my levels. And essentially, it's no surprise that this is a trend line that's trying to be recaptured or at least held, and this is a bullish trend line. So anything below this line on a clothesline basis for a couple days in a row, I'll consider that invalid. But right now, this is still intact. We're retesting this reload zone. So is this just a correction? Potentially. It certainly doesn't look like a cataclysmic crash yet. Now, if we do open up in the next couple days and we're retesting these lows down here, I'm going to get awfully worried. But for now, it looks bouncy. NASDAQ, I think, is really what we have to take our cues from. I really believe that, and this is my personal opinion, I'll always make sure that I make that clear here. But I really think that the NASDAQ is kind of what's leading this market. It took the NASDAQ a long time to really break down the way that the stock market did, the way the S&P and the way the Dow did, and it did it in a much different way. And I really think the reason for that is because you have a lot of your tech stocks in here, a lot of the things that drove this market lower that really weigh on it are what's kind of giving it whatever evidence it needs to break down and even bounce. So I'm going to take my cues here from NASDAQ. You can see the NASDAQ's got the same internals going on, same potential bullish divergence, same reload zone area. Depending on how that performs is really how I'm going to take my cue. I don't have a trend line drawn here, but it looks like this is probably broken. So let me just draw this here just to make sure that we've got, but technically speaking, I mean, it should come as no surprise to anyone who's listening to us right now that this market is starting to, or at least attempting to bottom or bounce in the area that it is, reload zone. I'm going to start to sound a little repetitive as I'm talking and doing this at the same time. So it's interesting to note that the NASDAQ has closed definitively below its trend line here. So, I mean, does that mean that this whole market is bearish? I mean, I'm taking the NASDAQ as my cue here. So to me, if we don't recapture this trend line going forward, I'm going to stay bearish on this market until we see some real signs of bottoms and rallies coming in. So from my point of view, NASDAQ looks dangerous. Go ahead, Brian.
I was going to say, you could just draw a downtrend line off of those two peaks. And if we can recapture that downtrend line, that's probably says that the market is done correcting. But on balance, I'd have to agree with everything that you said here. I mean, it's pretty logical. So a little bit of room here. And I seem to recall talking, I don't know whether I talked to this community or whether it was just to the Twitter verse, but we can't really look for a bottom in this market until we start seeing the divs come in. And sure enough, our divs are starting to form. So, if we start thinking about like the 3 reasons for a trade, I think it makes a lot of sense that isn't that interesting? Oh, you drew it off of that high, eh?
I see what I did. Sorry.
It's just interesting to see how we now have location. So if you were going through sort of your checklist of reasons for trade, and I think we talked a little bit about this recently about how location is absolutely the most important thing. So it makes sense now. We're coming down into location. Then the second thing we want to see is divergences. And if you just take a quick boo at my screen here, got a bunch of, I think, has anybody on the site heard me talk about the semiconductors, the SOX, as the ultimate sort of leading indicator in the stock market? So I don't know whether SOX is back to a respectable trade location yet or not. I suppose if we just do 52-week ranges, where are we here? So there's 52 weeks ago right in there. So on an annual basis, and whether you draw it off of that low or the next low, it's up to you. But there is reload zone. So ironically, and it is interesting how Thomas is saying, when the fundamentalists start scratching their heads, not a bad idea to look over at the technicians. But what do you think, guys? Does that make sense why that would be a respectable trade location? So really, we've got now number one thing that we really like to look for at TRI for trade setups, location. And then we go down and we look at our momentum indicators, and gee whiz, does everybody see how Willie is nice and stupid now? What do you think, guys? Is that a good place to be hunting shorts? Probably not, eh? And then, on top of the fact that Willie is stupid, hopefully everybody can see. And, the interesting thing is if you go index by index by index, they're all looking almost exactly the same. Divergence hasn't confirmed yet, but it's forming. And then should this divergence actually confirm? Who can fill in the blank? What's the third ingredient that we're going to look for a trade? We've got location. We've got indicator confirmation. And let's assume that this divergence does come in. Right? Last thing we want to look for is give us some nice structure. Thank you, Christian. It's interesting, just on the short term, and this is why I don't know whether we're right at the bottom yet. This is, and the great part about us being so chart-oriented in crypto is we get lots and lots of practice. Anybody tell me what's the name of this type of pattern that's developing here? Give you a hint. Twinkle. Hey, Diamond. Yeah, you got it, Bubba. Way to go. Hey, nice one, Jacques. Jacques is learning, if that is your real name. So my hunch is, let these divergences come in. Maybe we get a nice rally back to 13 EMA here on SOX. And then if we can form some sort of nice little polite bottom, W or something along those lines, I think we got ourselves a trade. And if we look at downtrend lines, then I think you could probably do something along the lines of that high to that high. Notice how that's a pretty flat trend line, eh? And, let's assume that this is the bottom. I don't know whether it is or not. But notice reload zones. Can everybody see how 78.6 is going to line up nicely with that trend line? So it seems to me I can start seeing the counter trend move coming. And, of course, also, too, everybody should say, holy crap, look at that gap right up there. So if I was going to look to hunt for new shorts, this is not the place to do it. Now, is this the bottom? As Thomas said, we're at really important levels here. We've got location. Now, if we do want to think about buying, right, we just want to slowly let this develop. But I think we're probably, my hunch is we're like 70, 80% of the way through this correction. And as well, too, I really think a lot of this is entirely based on politics in the United States. I can understand with the whole shooting at the synagogues and these pipe bombs and stuff being mailed out, that people are not only extremely anxious, and given the fear cycle apex, that makes complete sense. This is exactly when a lack of confidence in the system should happen, and it is happening. But also, too, I wonder whether, you know, the person who's running the executive branch in the United States right now is a very polarizing figure. And if people start seeing that polarization is actually turning into violence, then a lot of the housewives that voted sort of that direction last election, they may cool their jets. And so one of the reasons I think why the stock market just simply can't find a bottom is it is very worried about whether we're going to have a major sort of power shift out of Washington in a week or two. I think probably the market that we should all keep a real close eye on here going forward is our buddy, the professor of economics. Professor of economics is coming into, very much like the stock market, it's coming into a very interesting trade location area here, right? But the problem that I have with the professor, and this is, of course, when you know, the last U.S. election, it was right here, and you can see how that consolidation it resolved itself in a huge bullish move. Yeah, maybe we pivot through here and head back up into these reload zones here, but can you see that the professor is not very happy anyway? I don't know. Can anybody can you know, what are we supposed to think if we ever see the market smiling at us? Well, whoops, that's going to be a wink. The professor is not happy here at all. There's something not right. So the question just ultimately here is, in my opinion, if the political situation goes against the GOP, then I think the market probably is going to work its way right back down to these original lows where before Mr. Trump came into power, and there was sort of like a, you know, an ebb and flow between the two political parties in the states. I think basically the market's just going to hit the reset button. If, however, the Republicans can hold on to control of the Congress and it's just sort of business as usual, then I could very easily see us work our way right back up into this zone up here. So it's interesting how you can see the whole market is setting itself up. It's not just the stock market, it's the whole economy. So I just wanted to add that into the equation. Sorry if I went off on a tangent there with a professor of economics, but I saw that this morning. And kind of like the stock market's coming into buying zones, I can see the professor's coming into a buying zone here. Let's keep an eye on how he acts through here. And if we get any sort of bullish indication, then I think it's business as usual. Head right back up to the top end of the range, just like we said with the stocks. They'll probably all head up back up to the top of the range. If, however, we have a major political shift here in Washington, and that's now coming in, it's basically 1 week from today, isn't it? So my hunch is probably through this last few days heading into the election, we're probably going to see the market sort of try and balance itself out. And, you know, guys who are short taking money off the table, guys that are considering going long, maybe what we call it position squaring, just to, you know, keep the books flat. And then as soon as the election results are out, you're probably going to see a very violent move one direction or the other. Might even want to consider, you know, looking at maybe even like a strangle or a straddle with the options on the stock market. I might even look at that over the next few days just to see if it's worth taking a shot in that direction. But of course, that's predicated on the VIX being a little bit calmer and option premiums not being so expensive. So it's interesting that Mr. Bear's got the VIX on his screen. What are you seeing out of the VIX these days?
I'm just reading an interesting article here on Zero Hedge about the term structure of the VIX, this is something that I'm not very familiar about. I'm trying to educate myself on this right now, but essentially we haven't really seen breakdowns in the term structure since earlier this year. And again, it's happening now, which is no real surprise, but evidently the one thing that's sticking out to this is that what happened in 2008, they're highlighting similarities in the term structure there as well. Now, anyone that's been listening to us since February knows that the VIX is pretty much a ticking time bomb at this point, and anything as far as trading volatility and trading that comes at not only high risk because of the derivatives themselves, but it seems like liquidity may not be as abundant as many think when they're taking large positions to hedge risk in the market. I know that retail probably plays this maybe a little more than, say, a hedge fund would. This is more like a game, I guess, for retail investors, and maybe institutions play around in it, but not to the degree that they'd like. And essentially what's going on here is just failed to make new highs on the VIX. So what this says to me is that we're not ready to bust below the year's lows. If this thing really started to ramp up and you saw the VIX machine really starting to climb higher above 30, then I'd say maybe watch out because this has made new highs. But you can see that conversely to the internals of the equity markets that we've looked at, Dow, S&P, NASDAQ, that you have a potential bearish divergence. And that makes sense. Volatility might settle down. We might do a little bounce and just calm down a little bit. And I'm really kind of hanging on to the thesis that this is the equivalent of 2007 to what was 2008, and we're currently in that 2007 period in 2018, and that the potential crisis may just be getting started into 2019.
Yeah, I love the idea of the market actually topping out 2019. And, especially if the Democrats win the Congress, Mr. Trump's just going to have just a really, really tough time for the next couple of years. And, it might even culminate in, I saw actually another lawsuit was filed against his family for tax evasion and stuff. So, if those Democrats do win the White House or the Congress, holy moly, is his life going to be challenging.
Yeah, people are very confused about what's going on in American elections. I have a lot of clients in Europe, and I've been speaking to them recently, and they're just like, what is going on in your country between the screwed up politics and the gun violence? It's like, it seems like it's a war zone. And now you've got trade war with China. And I said, well, you guys don't really have it that much better. You've got your quantitative easing program is about to be completely turned off. And you're just look at what's happening to our market. The reason why you're going down is because of us. Now, what happens when you guys start going down because of you guys?
Yeah, I saw Eurozone GDP came out today, and it was horrific. It was like 1% or something. So, and the irony of it all is that I wouldn't be surprised that, we always say that new Fed, central bank governors are tested, and Draghi's leaving now, eh? So I wouldn't be surprised. And also, too, Mr. Putin has been very quiet of late. And these things usually move in cycles. Maybe this is where he takes a pause, and 2019 is where he starts getting active again. I don't know. But, it's definitely interesting times we're living in, that's for sure.
Yeah, and as far as, if we were to look at technicals here on the euro, this is making new lows, but in the face of potential bullish divergence. And I like to use past performance to tell me how the market will perform again in the future. And from what I saw from this bearish divergence, this was a pretty serious move. Now, whether or not, go ahead.
I would just simply say stay bearish until that bearish resolution divergence is resolved. I don't think it's been resolved yet.
Yeah, exactly.
And the thing is everybody did everybody do their fun assignment and find a US dollar index chart from 1979, 1980, 81? and go and show us what the US dollar index did through that period, last fear cycle. So, we could actually see the euro fall out of bed hard here. Yeah, I mean, put it all together, very tumultuous times, no doubt about it. Never a dull moment, eh? And that's the thing. And I even did you guys all see the articles by I think it's Rand Paul? I think that's his name. I don't know. Maybe it's his dad who's asking for cryptocurrencies now to be the new gold standard. I thought you guys would love that. So you guys, we got a sort of a crypto cheerleader in the U.S. Congress. This guy here, I don't know if you guys saw this. Ron Paul, that's his name. I always get his name wrong. Tax-free crypto could help avoid a Fed-created recession. So I thought it was just interesting that that crypto is now being sucked into this debate as well. So yeah, it never a dull moment. Basically, you can't write better fiction than reality. What I'm really worried about, and what bothers me immensely is, does, the United States of America break down into like civil war or something? I sure hope not, but only time will tell. Anyway, that's about half of the broadcast. So should we hop on over to crypto at this point and hear what's on your mind over there?
Just one commentary about the US dollar. This thing's really ramped up to the upside. And this is actually, let me see, did this tail actually break the previous high of 96.98? So the high was 96.95. So this was 3 ticks away from breaking the previous high of this session from end of summer. And it's really, really close to breaking out. And it shouldn't surprise anyone. I guess Brian loves to ask questions, so I'll ask questions to the community, if you don't mind. Can anyone imagine, in the face of the current monetary policy, why you would see the US dollar creeping up in the face of a declining stock market?
Yeah, it's simple. Sorry, simple. I won't answer that. Somebody else answer, please. No one?
Is that Ferrari?
For free or for Fury Rear? That's good, Brian. Excellent.
Yeah.
The worst part about all of this, right, is that when people are feeling comfortable and relaxed and willing to take risk, they go into government's currencies that they maybe don't have entire faith in. When people are shitting their pants and they're scared, they run into the only thing that they feel is safe. And whether you like it or not, the simple fact of the matter is there really is only one central bank that seems to be driving the bus right now. It's been that way since the end of the Cold War. Remember, the Americans won the Cold War. They were the winners. So as a result, they are the basic safety net of the world. And then add insult to injury, if you have something like the Eurozone actually underperforming economically, then there's no reason to be running into the euro. And of course, there's lots of questions as, the Italians and stuff, whether the euro is even going to survive. So in that kind of environment, really, historically, it's been a case of running into the U.S. Dollar and basically buying American T-bills and just riding out the uncertainty. Or running into Japan. And if anything, if we actually see a move running into the yen, I actually think that's an even worse sort of fear proxy, because it means that the people that usually run into the US dollar are questioning whether the US can actually survive. And through quantitative easing and all that, there was a serious question as to whether the U.S. Fed was going to make it. I think, in essence, the Americans were tested. The Americans came through the other side. Now they're actually raising interest rates. And if you think about it in the most simplest terms, if you are sitting, and remember we've done this before, if you're sitting in the middle of Rhodesia, I don't know whether you're not allowed to call it that anymore, Botswana, Bangladesh. Remember we did Bangladesh, right? You're sitting on $1 million and you don't want to lose that $1 million. Where are you going to put it? And the Americans are actually paying you more to hold their paper.
Ding, 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 ding. There you go. That's what I was looking for.
Okay, so on top of the fact that it's a classic fear proxy, you also have the fact that, hey, you're getting paid more just to hold the U.S. paper. Are European rates still negative? I can't even remember. Have they come off negative yet?
I don't think they've started raising them. I could be wrong. I'm not up to date on my European rates.
Yeah, I mean, if you like the big central banks that you can actually trust in the world, United States, the Eurozone, and the Japanese central bank, the Americans. I mean, remember? Do you guys remember? I actually did this. When I was a commodities broker, and this is forever ago. If you will indulge me here a moment, I'll show you. When I used to teach the level 1 class, I used to just simply show my old commodities brokerage currency trading reports. And it was just simple, like, does anybody remember seeing these? I don't know. I mean, I haven't taught the level 1 class in a while, but I used to do these reports on a regular basis. If you were looking at this picture, I mean, it's really simple, guys. Where are you going to put your money in the world? Obviously, Australia and New Zealand. And even Euro, to a certain degree, way over the Americans or the Japanese or even the Canadians. I mean, it's just this simple. And the interesting thing, if you want for a fun assignment, somebody go find out what the Australian dollar did following May 2009. I think you'll find that, holy shit, the Australian dollar went up like crazy. So it'd be really interesting. I don't even know if this site even exists anymore, but it would, oops, what's this say? We're sorry, but the service you're attempting, okay, well, looks like it's gone. Geez. Imagine actually expecting a website to stick around for 10 years. But, you know, it might be a fun assignment. Let's all see if we can go down and pull a rate comparison of the 6 or 7 major central banks, and let's just visually see who's going to pay you the most money to hold their paper. And my hunch is, I think it's the Americans right now. The Australians had historically pretty high rates, but I think they've been actually dropping them recently. But that should be an interesting study to do. So I might do that after the conversation today. So that was about a 20-minute, well, I guess it was about 10-minute side there. Sorry, Chief. Totally cut you off. Your continuing thought about the U.S. dollar. And what was your question you asked everybody? Why would people be buying the U.S. dollar, and why would the U.S. dollar be going up?
And I think you did a good job answering it. If this was an essay question, I'd give you an A-. Maybe a little too long. I dropped you a half a point.
What did I get? I must have made spelling mistakes. What did I get wrong?
No, you're all good. That was essentially the answer to my question. If I were to sum up Ryan's answer in one sentence, it's because interest rates are going up. And that's why money is flowing into the U.S. dollar.
In the US.
Yes. So there you go. Now I'm ready to transition to crypto, though.
All right. I thought it was so cool. I'm probably going to embarrass the hell out of him. But Mr. Tesla sent me a whole bunch of sound bites. So if you want to get the crypto song going, I think I have to play this every time we start.
The crypto flambe. The crypto flambe.
All right, Alex, you want to get your the crypto song going?
Let's do that.
Me. Bitcoin is great. Bitcoin can't wait.
Thank you, sir. All right, where do we want to begin?
Well, let's start off with probably the biggest piece of news that I've really seen that isn't attracting the attention that it should. Probably bigger than the Bakkt launch. Coinbase is planning on going public. They received roughly an $8 billion valuation. Got a little revenue breakdown here. They've got a couple of series of fundings going on right now. I think that they just completed today their Series E funding of about $300 million into their IPO. When this goes public to people like you and me who want to buy, I'm not sure, but I mean, this is really big for a company like this to in the crypto space to be going public on the US market. I think this is going to be sort of the next category of what everyone commonly refers to as FANG stocks. Are going to have your crypto stocks. Who knows? Maybe they'll actually be able to fill out that as an acronym, with Coinbase being the first one. But I mean, if I'm a crypto guy, which I am, and I hate investing in the stock market, which I really don't, but if I'm someone who believes in crypto and has been burned in the past and seen maybe my parents get burned in the 2008 crisis, this just might be the fuel that gets those type of people back investing into the stock market. So this is really cool stuff that, you know, a crypto company is planning to go live or going public. So I think that's the news here as far as Coinbase is concerned. And I'm going to jump to our next event, news event, which is Fidelity kept going on and on that they were going to be offering a product to their investors and people that trade on their platform. I think a lot of people expected it to be an exchange. I mean, I certainly thought, well, hey, if Fidelity's offering a crypto product, that it would probably be an exchange, but they're saying it's really just going to be a custodial solution. And it seems like a lot of these institutions are realizing that there's a huge hole when it comes to custodial services. And if you were to imagine that the crypto space is sort of like a vacant lot on the ground, and this is real estate, you would essentially need the foundation to build your building first. And I think for the institutions, to them, the equivalent of a building's foundation is the custodial services, the ability to securely, reliably store Bitcoin, where you can actually keep track of how much they have, unlike Tether, and figure out that, hey, you actually are holding the coins that they claim. And this is a big thing for a company like Fidelity, and we've seen other companies say that they're offering custodial solutions, including Coinbase. I think Circle's working on something too. So everyone's honing in on the fact that, hey, if we're going to be trading crypto, we better have it, and we better have enough of it. So it comes as no surprise when you look at price level that it's kind of being supported at the $6,000 level. Whether you're backed, whether you're Coinbase, whether you're Fidelity, you're accumulating these Bitcoins so that you can prove that you have them. Maybe this is ushering in a new era for stocks to actually have full accountability and be able to track exactly what's available at any given time on the blockchain. This is great. I'm really encouraged to see this news. Now, everyone else is just looking at the crypto world and they're just like, there's nothing going on. The price is dead. Bitcoin's horrible. I can't, there's no trading going on. Volatility is at an all-time low. Well, on top of that, you also have velocity at all-time lows. And what velocity essentially means is the movement of Bitcoin from wallet to wallet, exchange to exchange. The overall movement of these coins as tracked through the blockchain is at lows that haven't been seen. And there's a nice chart that I think I just skipped over. Where the hell did this go? Oh, right. So there's this nice chart showing that in blue here is our Bitcoin velocity. You've got the Bitcoin price in this light orange, and then M2 is the red line, M2 is the black line. And you can see here that back in 2010, velocity was around what they're calling 5. I'm not sure how they're measuring or what unit of measure. I'm sure that's not in meters squared or feet per second for you physicists that probably don't even use feet. But essentially, you're seeing that Bitcoin velocity hasn't been this low since those 2010 levels. And back in September 2010, I think most of us really weren't in here. I mean, I was mining back in 2009 for fun, but certainly wasn't tracking Bitcoin in any shape or form to the extent that I was in 2013. This, for anyone who doesn't know, is before the Mt. Gox exchange really rose to fame. This is even before Silk Road got off the ground. I mean, we're talking like Bitcoin has not moved at all back in those days. It was just for fun, right? And now we're seeing it returning to those levels. So what does that all mean? To me, it means that people are looking at it as an investment. Nobody's actively moving their coins back and forth. I don't think anyone's doing any crazy deals in Bitcoin. I think that right now people are just hodling. And I think that's the information we can glean from this. And you can see, I mean, does that look like a letter of the alphabet that might be trying to form there? To me, it sure does. It's close. Maybe it's...
Maybe, but don't put the cart before the horse.
I'm not. Don't get me wrong, but it's interesting to see. So that's cool news. The next thing that I just want to cover here before we jump into the technicals is it's kind of like a security update or warning, if you will. If you are a Mac user and you use an application called, where did it go? It's like a coin tracker, or I'm losing this. Coin, according to the best currency ticker. Coin ticker, yeah. So it's called Coin Ticker. And basically what this was doing is it's showing kind of up at the top of your screen the current price of Bitcoin in real time. So a lot of people might find that useful instead of having to, maybe flip between tabs to check the price. This Coin Ticker app has been dissected by this security researcher and found that they use open source projects called Evil OSX and Eggshell. And evidently those two open source projects, those install themselves when you install this Coin Ticker app. And eventually those could lead to exploits that could gain access to your computer, maybe install keyloggers, maybe man-in-the-middle attacks, whatever it may be. The point is, if you do have this on your computer, check out this article. I'm going to post it in the lounge for you. There's some instructions here on how to take it off and how to mitigate your risk here. So hopefully no one's exposed from that. This is here in the lounge, so you can just search for tracker app or backdoors in the lounge, and you should be able to find that link if you're watching this later or even later. It should be searchable. So that's for your safety, I suppose we can put it as. So there's that velocity warning. So I guess now we can dive into the technicals. And as far as I'm concerned, I mean, Brian was kind of shocked that I wasn't taking any sort of positions here. I mean, I was short, right? I've been short, but I got chopped out. And I didn't profit from this trade because I just got stopped out. And it eventually, it's funny, I tweeted out this stupid thing about this hummingbird setup. And I said that the 4-hour chart was supporting a tag of about 6,200. And essentially it tagged that area. I mean, I think it went to 6175 or something. 6172, so pretty close to where I was looking for this thing to land. Now, as far as where it's going to go from here, I mean, to me, it's just like wherever this thing lands, it's a soft landing and it decides to maybe take a nap or go into some form of hibernation for a week or two. And that's what I'm seeing. I mean, right now you've got the Ethereum conference going on in Prague. There's probably a lot of developer discussion. I don't think it's going to hype many of the VC guys enough to be like, okay, we need to buy a hunk of Ethereum and Bitcoin right now. I don't think that's this kind of market. I think this market is very much waiting to see what happens with Bakkt in December and what happens with the ETF. This market is, to me, obviously waiting for those news events. And until those come out, I think the accumulators are going to accumulate. And that's what's happening here. People are going to buy up any kind of dip. Now, what happens if we lose this $6,000 low? That's going to be the real determining factor for which direction this market wants to go. Since the summertime, I really thought that we needed to tag just shy of $5,000 before going up. And in my opinion, all of what we're seeing technically here is, and I hate to say it, it's really artificial. It's market guys coming in, buying this stuff up because I think they need the Bitcoin in their custodial solution. So once those guys supporting the market at this level don't need any more Bitcoin for their custodial solutions, I mean, I can't say that the price is going to fall here, but it certainly exposes the market to the downside. Now, if we've rallied since then, it's a totally different story. But I need to see how these events unfold. And for now, I don't, while it looks like a nice range and the potential for a bounce might be here, I mean, this looks mega phony to me a little bit. I just don't see anything here. And, that could change hour to hour, right? If we put in a W here, then yeah, I'll probably play something up $125. But am I looking to be in a position for any more than a couple hours to a day at a time? Not really. I can't definitively take those positions, especially when you look at the higher time frames and you look at what are we doing here except making tops on a daily time frame. So this looks like shit. If you're a structure guy, I mean, lots of toppy action. And the fact that this hasn't rolled over just supports the idea that these guys are accumulating. And unfortunately, I don't have any other commentary other than that. I hope that's helpful, but maybe Brian maybe you've got some kind of trade here or some other thoughts that you'd like to share.
Well, I think on balance, you got it pretty much nailed. I do like the idea that, I had sort of mentioned this yesterday. It seemed to me that something just didn't smell right about this Ethereum dump ahead of the convention. Usually what ends up happening is, buy the rumor, sell the news, sell the rumor, buy the news. I guess what I've noticed here in the Bitcoin space since I've been in here for a few years now is usually price is relatively strong into these conventions, and then on the other side of them, all hell breaks loose. I do like the idea that, historically, if we go back and look at the Bitcoin price, usually the first week or so of November, Bitcoin catches a bid, and then about halfway through November, I don't know why it happens, but we can go back and look at the charts in future episodes. Maybe I'll do that for tomorrow. Usually halfway through November, there's some sort of nasty reversal, and like the 2014 market, we actually had to come down pretty darn hard into the end of the year. That's kind of what I'm thinking, and it kind of makes sense too, given your conversation about how maybe we do get an announcement mid-November that the ETF is going to be approved, whatever, and all the institutions have done all the buying that they need to, and then the thing drifts into the end of the year. I'd also say too, from a tax perspective, considering how many the market's come off so much since the levels that we saw in January, there's probably going to be some tax-driven selling here into the end of the year. So I think that's got a bit of a headwind ahead of it. And also, too, what I really like to see, and I remember back in 2014, 2015, we saw it, I don't really see anybody capitulating. And I remember the day actually that Bitcoin bottomed, there was a guy who was just like, that's it, I want out. And he had like 30,000 coins or something like that. And he placed them up for sale. And you just literally watch the market chew through all those coins. And then once that sell order was gone, she never looked back. So I haven't seen really any of that kind of talk out of Bitcoin at all. Which bothers me a little bit. If anything, all this sort of sideways has sort of lulled the community into a false sense of security. So, I certainly, as I talk about repeatedly, and actually I had this conversation with Sjord this morning. He's like, well, I don't have time to program, so I'm just simply going to put myself on a dollar cost averaging program. You say that Bitcoin has come down into higher time frame reload zones. So just once a month, I'm going to go buy $50 worth. And I was like, perfect, totally fine. And literally, if anything, he's rooting for lower prices. We got another member here, Chris, Change Society is his screen name. And hey, look at that. He did it again. I did this yesterday. I mentioned his name. All of a sudden he pops in out of nowhere. And look at, he did it again. That's twice you've done that. Where basically I was just saying, yeah, you, that he's actually rooting for lower prices and just sitting here waiting, just waiting for lower prices. So, in a weird sort of way, I think, those kind of people and dollar cost averagers and stuff like that, they're more than happy if the price goes down because they're going to be able to buy more Bitcoin with their little monthly purchase dollar amount that they have to work with. So, Frank, when was that U.S. Marshals auction? We always seem like totally have forgotten about that, eh? Isn't there another one coming up here pretty soon?
Yeah, let me grab the date while you.
Yeah, so I would like to know when that is, and I'd like to gauge sort of the public participation and even sort of the crypto Twitterverse, sort of participation, how much they're interested in.
November 5th. The 5th, one day before the election, November 5th.
Oh, interesting. Okay, so that's actually coming up pretty soon here, right?
Yeah.
So in previous auctions, price was actually bid up into that auction. So this is a little interesting to see that price is actually coming down into the auction. I remember somebody recently said, "Hey, I'm thinking about bidding on those. What price do you think I should bid?" And I'm like, I haven't got a fucking clue. But it'll be interesting to see if there are many participants in the auction. You might also argue too that maybe price is being manipulated a little bit here to try and keep the price down, and so whoever really wants to buy these is going to try and engineer the cheapest price possible. I don't know. So there's that fundamental event. We should, and really, if Bitcoin is a bull, then we really should see this thing rally into that event. So the fact that it's not rallying into that event is a little concerning to me.
Well, to me, it's only 600 Bitcoin, which is about $3.6 million at today's price level, right? 600 times 6,000 is 3.6 million. So I don't know if the market really cares about this auction, in my opinion.
How much was the last auction for?
The last auction, probably.
They only got like $600 a coin for that. So if it was less than 6,000 coins, then it would be smaller.
Let's see. 25 million in March was the most recent one. So a couple, probably, almost 10 times bigger, maybe 8 times bigger. Here's another one for 31 million. And, oh no, they're just evaluating differently. So this might be one of the smaller auctions they've had. That was 170 Bitcoin, so almost 3 times the amount of Bitcoin they're selling off here.
Okay. So long and short of it here is November 6th, probably a catalyst date. We should probably see some sort of pivot around that event. And then did they actually put a date on this backed event?
Yeah, I think it was like December 12th was an announcement. I can double check.
Okay. Well, okay, so I like the idea that
they're going to go live on December 12th.
Sorry?
I think Bakkt is going to go live on December 12th, but they're probably going to get their futures approved, their Bitcoin settled futures approved this week.
Okay. So then that means that if they're loading up here, they can completely hedge that position if the futures are put on, right?
Makes sense to me.
Yeah. So right now they're accumulating. The futures get listed. They can go and hedge the shit out of all those portfolios. So they've got, like, for custodian purposes, they've got the Bitcoins. They are completely hedged against price fluctuation. So anything could really happen after that December. You said December 12th was the announcement?
Yeah, so it says Bitcoin. Oh, this is CME. What am I looking at here? December 12th, yeah.
So, stuff for us to think about. We've got 3 different catalysts here. We got this auction here on the 6th, then their futures announcement, and then their sort of big public offering, eh?
Yeah, so here's their official document. I'll post this in the lounge. This is pretty cool to see. They've got their contract size, price quotation, and this is for their daily futures contract, which is settled every day, and there's a 2-hour time period where the market doesn't actually trade. This could really be the transition that we see in the market paying attention to the various exchanges we're used to, and for me, OKX, and more so the market paying attention to these markets. That makes more sense to me than, than anything else would be taking over for those other exchanges. So this is going to be a very fascinating event for a trader like me to pay attention to see how the market pays attention to it, how price fluctuations occur, and more so to see, are they tracking volumes? Are they delivering that information to the public? Is this kind of like, will this be delivered to the commitment of traders reports? How much transparency will we have? These are all questions that I don't know the answer to yet.
Speaking of which, Bobo, do you mind if I share that chart that you have been working away on? Bobo, are you there? There he is. So Bobo, I think that's your professional name, right, Bobo? He has been working away on this this commitments to traders data set. You got a microphone, Bobo? You want to explain what the heck this all means to everybody? Not on. All right. If I understand correctly, is the blue line? I'm not quite sure who's who here, but it definitely looks like there's a change in trend. I guess this is the small specs. They were all rah bull out of the gate. I think this must be price itself. And then these are the large institutional players. Is that correct? Blue managed money. So it is, it's great to see that the small specs are finally coming off. And in essence, they usually have the trend wrong. And it's interesting to see that the smart money, the managed money, whether these are actually large institutions or whether they're commercials, I don't know. But it is interesting to see the shift in trend. So, by all means, I don't know whether Bobo wants to share this with other people, but I thought it was just a really interesting study. You can see a definite trend shift going on here in the commitments to traders reports. Something's brewing. Okay, that is basically past the top of the hour. Is there anything in closing that you wanted to sort of impart onto these people before we let them go?
Just keep paying attention to what's going on in the market in terms of the news, because I think that this sideways action is telling a very specific story. So, we'll continue to give you the news and give you the current updates as they come in. So just make sure that you have your head on straight, you're ready to take advantage of anything as it comes up, and make sure you're still liquid. And as Brian always says, make sure that you're coming back to trade another day. Don't put yourself in any kind of precarious positions, because it's really not necessary.
That's right. Slow and steady wins the race. All right. Thank you, sir. Appreciate the contribution. Excellent job as always. Mr. Mayor, you think we've given these good people some things to think about here today?
Yeah, much approved.
All right. So we've got the mayor's blessing, and I think he's got a shirt on today. So that's encouraging. I'll be out servicing the car later on today, but I'll be around the lounge for the next couple hours as the market does its thing. If you have any questions, please feel free to reach out. Tomorrow we have level tours. And just sort of an update for you level tours. I added a bunch more material for you to chew on with regard to gaps. I just got to find the screen here. One of these screens is not like the other. Which one is not the same? Oh, isn't that weird? Maybe I didn't. Oh, here it is. So level tours, you should pop on over before class tomorrow. And I've added another article to help explain gap theory. This is actually from Futures Magazine. And it's interesting that gap theory was actually postulated by Gartley. So anybody who's a level 3 or alum should get a nice little chuckle out of that. They all are very familiar with Mr. Gartley. So level tours, I'll see you guys in the group session tomorrow. But the long and short of it here is before that group session, just familiarize yourself with a bunch more tools I put in the resources page for you. Okay, I think I'll leave my rant at that. We're going to see Sen on Friday for his nice presentation of his screening tools on TradingView. So can't wait to see that. Be sure to tune in for that episode. And I think, Albert will be giving us guidance as to any sort of marketing stuff. Albert, do we want to talk to these people about doing the third-party testimonials at some point? I don't know whether Albert's hearing me or not. Let's do tomorrow. Okay, so let's make a note. Alex, if you could just make a note in the log that Albert, we should give him the floor for a couple minutes. Albert, if you could find a microphone or something, and maybe you can talk us through how to do that third-party testimonial stuff. Other than that, I think I'm done talking for today. Try and play from a position of strength, like Mr. Bear said. Don't put yourself into a position where you can't come back again tomorrow. Make sure that we all go to bed not totally stressed out about blowing ourselves up. You don't want to put yourself into that kind of position. And PMA for the win. Actually, I had a really good meeting this morning with Frank. Stefan, working on self-help modules. And if I'm not mistaken, Frank is working with Sen. He's also working with a level 2er, Avery. The feedback that I'm getting is that they're very, very pleased with the work that he's doing with them. So I had a great meeting with him this morning, and really, really cool package he's putting together of whole bunch of self-help exercises, how to deal with problems in your life, that are not like specifically trading oriented, mental attitude, that kind of thing. So always, we got lots and lots of stuff. In fact, I had a great meeting this morning as well with Sjord on building out the algos and the trading tools. And I guess maybe we'll finish off with just a quick little boo at that. One of the recent signals that the algo popped up was on, what the heck was it? Urban Outfitters. And, you guys have been working with me long enough. You should look at this chart and go, holy shit, look at Willie. Holy shit, look at MACD-Div, right? And look how this thing's performing. So I can't wait to get these kind of tools in your hands on a daily basis. So keep on rocking, Sjord. You're doing great work. Everybody here, PMA for the win. Let's just slow and steady wins the race. Bitcoin will do what Bitcoin does. Don't put yourself in a position where you can't come back again tomorrow and play the game. Other than that, I better shut the hell up. So the only thing left I'm going to say is a big bye for now.